Time for the big three. I'm Alex Coffey. 3 stocks, 3 charts, 3 trades. Rick Ducat, of course, is here, lead market technician for the Schwab Network. We're also joined by Mike Shorr, Director of Trading Education for Prosper Trading Academy. Mike, let's get a big picture thought here. 2025 is coming to a close. What did you make of the year? What's your big picture thoughts for next year?
2025 was kind of a weird year. Just kind of oscillating. I think that 2026, I think that we're going to see. I'm very bullish, and until I'm proven wrong, I've been saying all year long, buy these dips no matter when they come, buy them, and then be wrong if you're wrong. But it doesn't pay to be a bear in this market.
Well said. Let's talk one of your stocks. First one on the list is Uber. Looking for a potential breakout trade here. What are your thoughts on Uber?
Yeah, I'm looking at something that it's below its 200-day moving average, which you would think that they would be kind of leading the pack. And so I'll take a cheap shot to the upside. I'm not looking for a huge move, but above 82.5, which we're a little bit below right now, but above 82.5, I like a calendar spread targeting that 87 strike, which is just below the 200-day moving average, and you can buy that for 40 cents. The 9th versus the 16th 87 call calendar, you can buy that for, if we get up there, 40 cents. You're risking 40 cents. The way that I have it modeled out, you're looking at 75 to 80 cent profit.
Yeah, so about a 2-to-1 risk reward on that if it kind of plays out as you're saying. Hold those thoughts though, Mike. We'll get to your next stock in just a second. I got Rick here. We're going to take a look at the chart. So he's looking for the breakout, that breakout being triggered by an 82.5 trigger point. Rick, when you look at these charts here in Uber, what do you make of it?
Yeah, boy, it should be a busy night for Uber drivers tonight, first of all. Should be an interesting situation there. But when we look at this chart, we can see that the breakdown that happened recently occurred at an important point, that level near 82. We can see this old high that we established here then became a significant low point here, a repeated floor for price activity here. After it was breached, this old support then more recently has become resistance here. So we can see that this level 82 stands out. We can also see 77. That was another set of old highs back here. Then to the upside, our relative high point here, our high point during our decline here off of these highs near 102, that comes in near about 93. So 92.76 was the high. So that would be the next potential stopping point here during this rather sharp decline that we've seen recently. When we look at our moving average studies here, we can see our exponential moving average, our weekly 5-day EMA here in this blue color, that comes in right around 81.60. Our medium monthly teal EMA is crossing below our longer term yearly EMA there in orange. So these are signs of potential trend degradation, of potential bearish shift here. However, we are holding the line right around this supportive area. We could recapture it. Things are perhaps just slowing down as we head into year's end here. RSI was a bit better than you might have expected here during our declines. We did see a little bit of bullish divergence in momentum here, so another potentially positive sign. Finally, when we look at our volume profile study, we can see that the point of control, the heaviest trading area of all, comes in right here, this thick red line near 91 or so. We've also got significant volume pockets here near 84 or so, 83, 84, and down here near around 75. So those are areas that stick out as potential congestion points.
Good stuff. As we go back to Mike, we take a look at Intel. What a year it was for Intel, Mike. When you look at this name, what stands out?
Yeah. Bottom finding, bottom feeding. That's what I'm looking at here in Intel. I want to see us break out above this 38.26. 38.26. The implied volatility is ridiculously low for something like this, which means that the market thinks that the bottom is probably in. And so if I can do the 41.44 call spread for 40 cents, I'm risking 40 cents, and then I can make 270. I don't think I think the bottom's in on this, and I think on top of it, and I'm not a big fundamental trader. I understand that there are people that are paid a lot more than me to let's just say cumulatively. There are rooms of people that are looking at this, but I think that again, reward to risk, and I like the upside here in Intel. I didn't think maybe in the middle of the year I'd be talking about that, but I certainly am right now.
Yeah, and looking at this example, it looks like it's a call debit spread, Mike. Similar risk where you're risking that $40 like you were in Uber, but a little bit more max reward. That risk reward 6.5 to 1 as structured here. Similar style swing breakout setup. Looking for that trigger price around 38.26. But we'll take a look at the chart here as well as we pull back in Rick. So very different looking chart, Rick, when you look at the performance in Intel, really ramping up in this second half of the year. We actually looked at this one just a couple days ago, but talk to us about the setup here.
Yeah, an interesting situation here. We've got an upward channel type shape, and oftentimes after you have some notable gap up, like here with when we saw this involvement from various areas into Intel, we had this low point that came after the gap, then our subsequent lows lined up here. You can duplicate that line and put it across the highs. It matched up decently here. What you're looking for is kind of a line of best fit as best you can do it here. Sometimes the subjectivity of this kind of analysis kind of irritates people because it's not very exact, but what you're looking for is general ranges and general areas of potential support and resistance, especially when they line up with other areas. For example, 36, our darker green line here, you can see this was a high point and then subsequent low points repeatedly. It was then high points after a breakdown. Now it's become supportive. Now it lines up with the trend line here. So you kind of see that now 36, as we kind of put these two things together, stands out even more as a potential area like the make or break point. Just below that, we have our double bottom here near 33, our notable low point during our rally. That's once again where the bulls held the line. So now if we were to look at our moving averages here to get a feel for the trajectory of the price activity, for the most part converging kind of sideways here. We can see our moving averages are clustered together right around that lower trend line between about 36 to 37. RSI moving to the upside. Downward trend line has been broken, much like price, but we have not had the crossover above the 50 midline that would suggest more of a bullish shift. Finally, when we look at volume profile here, you can see that the shaded areas line up with the heavy trading activity zones here. 37, 36 to 38 really would be a better way to describe. That's where the heavy area is. If we were to break above the next notable point, right here, you can see this smaller peak near 40 is the obvious heavy trading area. Then if we were to move lower, right here, 30.50 or so, 30.50, that's the last holdout before we would be looking to perhaps even fill that gap or test that gap.
Good stuff, Rick. And we go to the final stock here of the big three, and we bring back in Mike, and we're talking OXY, which is only fitting, I feel like, Mike, on Warren Buffett's last day that we go to one of his recent favorites in the last couple of years.
That's kind of why I did it. And I've been bearish on energy for, I don't know, the last 3-4 months. At some point, there's enough going on in the world. And I don't like to look at things, you know, in trying to predict the future. But this is stock that probably should be higher. And so there's a lot of fundamentals behind it. There's a lot of things that can go on in the world. And we're at a value point. If we're wrong, we're wrong. Remember, I'm a trader, not an investor. This is not investment type of advice. But I think that we have a shot to the upside in energy in general. And I was looking at Oxy, and I think that that's probably a good place to start.
And we'll get that trade in just a second. I want to get the chart here on this one. As he mentioned, it's been kind of in the dumps here. Rick, what are you looking at in Oxy's chart?
Yeah, so when we look at this one in particular, we find ourselves near another important low point that we just rallied, 39, our green line here. That's about where we bottomed out. Backtrack over here. That was also where we kind of hit the bottoms after the crazy turbulence from the tariff news event shock happened. That's when we started to solidify here. Now on the verge of breaking out above our channel. Our moving averages that we follow are starting to shift upward. The faster ones are starting to outpace the slower ones. Meanwhile, RSI has made a bullish crossover above the 50 midline. So look for the 63 EMA, the quarterly, near 42 to be potential resistance. Finally, our volume profile shows the point of control right here, around 42.60 or so, above 43. Things thin out, then they pick up again, notably here near 46.
Good stuff. All right, guys, we got to run. We wish you a happy new year, Mike Shorr, and we can't wait to talk to you again soon. Director of Trading Education at Prosper Trading Academy. Happy New Year to you as well, Mr. Ducat, lead market technician here for the Schwab Network.